Welcome back to the Deep Dive. We're here to cut through the noise and bring you, well, the really compelling insights from the business world. Today, we're pulling back the curtain on a fascinating German company, the Fielmann Group.
Yeah.
You might not know the name instantly, but they're kind of quietly changing how millions see and hear across the globe.
That's right. It's more than just retail. We're talking eyewear, sure, but also hearing aids, audiology services, and all from a family business roots, operating on a massive scale.
So our mission today really is to sift through their latest annual report, the 2024 one. We want to find those nuggets that show how they're growing, how they're innovating, adapting.
Exactly. And how they handle being, a publicly traded family business with big social and environmental things to think about. I mean, think about it. They serve 29 million customers, Europe, and now more and more the U.S.
A lot to learn there.
Definitely. There's a lot of strategic wisdom in their approach, especially that balance between, say, aggressive expansion and sticking to their core mission.
Perfect framing.
Mhm.
Okay, let's zoom in. The core business first. What is Fielmann Group, really, at its heart? And what did the 2024 numbers tell us? What stood out?
Okay, so at its core, Fielmann is a stock-listed German family business. Vision care, audiology, that means eyewear, contacts, hearing aids, and something we'll get into, primary eye care. Their whole purpose is stated as to help everyone hear and see the beauty in the world. That kind of guides things.
Right.
And in 2024, well, the growth was really robust, pretty much across the board. They saw total consolidated sales jump 14.8%. That's $2.265 billion.
Wow, okay.
And here's the kicker. That number actually beat their own Vision 2025 sales target.
A year early.
A full year early, yeah.
That's more than just impressive, isn't it? It suggests something's really clicking. Was it just good market conditions, or is their strategy really hitting the mark ahead of schedule?
I think it's a mix. Definitely resilient demand, people prioritizing health after the pandemic. But more than that, it really speaks to their strategy, working quality products, good prices, great service.
So what specific areas grew?
Right, so prescription glasses, they were up 7%. Hearing aids, a solid 10% jump. Some glasses without prescription up 6%. Contact lenses, interestingly, were flat organically in Europe. Maybe pricing pressure, maybe online shifts.
Could be.
But the overall picture, big market share gains. Germany, their home base, they hit 56% market share in unit sales.
56%.
Yeah. And Switzerland, 45%.
Wow.
Austria, 27%. They're dominant in those core regions.
That level of dominance, though, does that bring its own challenges?
Yeah.
Like regulatory eyes or just finding new growth in saturated markets?
Absolutely. It's a great position, shows huge brand loyalty. But yeah, you have to keep innovating just to stand still, almost. And you risk attracting attention if you get too big. So the challenge becomes, how do you grow more? Which is probably why they're focusing on things like value-added services, as we'll see.
Okay. And beyond sales, how's the bottom line looking?
Very healthy. Net income for 2024, up 20.7% to $154.2 million.
Nice jump.
Which allowed them to propose a higher dividend, 1.15 per share, up from €1 the year before.
So shareholders are happy.
And importantly, cash flow from operations saw a really healthy increase too, up 45% to $410.1 million.
That huge jump in cash flow, that signals strong operations, right? A good base for what's next.
Exactly. Strong efficiency, solid foundation for investment.
Okay, so they're growing fast, profitably, generating cash, great springboard, as you said. Let's dig into how they're doing it. That strategic vision. Modernization, digitalization, global expansion. Let's tackle that global expansion piece first. That seems huge.
It really is proving to be a massive driver. Since 2019, they've been quite strategic, buying businesses, entering Slovenia, Spain. But 2024, that was the big one. They moved into the U.S. market.
The biggest optical market globally, right?
Pretty much, yeah. They approved buying 100% of Shoptical Topco Inc. That's the parent of Shopco Optical.
Shopco Optical. Okay, so a major U.S. acquisition. What did that actually mean for Fielmann?
Structurally, financially. Oh, it was pivotal, a game changer, like you said. Boosted their North America segment massively, but it also meant a big jump in goodwill on their balance sheet, up 49.1% to $446.9 million.
Right. Goodwill, remind us, that's the premium paid over the asset value, right? Brand, customer base.
Exactly. Intangible value. It shows how much Fielmann valued getting that U.S. foothold, Shopco's brand, its customers. But it also means, they need to make that integration work to justify the price tag.
Pressure's on.
And look at the shift. International sales were 21% of their business in 2019. By Q4 2024, 40%.
40%.
And they project it'll be over 50% medium to long term.
Wow.
Of course, this U.S. move needed funding. They took on a $305 million debt financing deal to make it happen.
A serious bet then, really committing to being global, not just European. Okay, so that's geography. What about technology? How are they using digital to reach customers? That omni-channel buzzword, what does it look like for them?
Yeah, they're aiming for seamless, digital convenience plus that vital in-store personal advice, meeting people wherever they start. And the numbers show it's working. Website traffic surged 50 million interactions in 2024. That's up from 32 million.
Huge increase.
And a key trend they're seeing and leaning into is ROPO, research online, purchase offline.
Ah, right. People browse online, maybe try virtual frames, then go to the store.
Exactly. They do the homework online, but want that expert fitting and final check in person. So Fielmann's boosting their online tools. They've even got an AI-powered frame consultant online now.
AI frame consultant. Okay.
Yeah, helps narrow choices, virtual try-on. But they know the physical store is still key for the actual purchase for many. It's about blending the two.
And it's not just about selling things, is it? They seem to be moving properly into healthcare services. That eye health checkup sounds quite significant.
It really is. This is where you see that mission statement connecting directly to the business. They partnered with a company, NLMDD AG, and now certified opticians in over 400 stores in Germany, Switzerland, Austria. They're doing advanced checks, intraocular pressure, retinal imaging.
In the optician store.
All right. And the clever bit is those images and results are then securely sent to specialist ophthalmologists for review.
Ah, okay. So it connects the optician to the medical specialist.
Precisely. And it's not just a gimmick. It generated 40 million in sales.
40 million. Wow.
But maybe more importantly, the feedback is overwhelmingly positive. 95% of patients rated it good or very good, and the company explicitly says this helps reduce preventable blindness, catching issues early that could lead to strokes or vision loss.
That's actually quite profound, turning the high street optician into a primary health touch point, making screening more accessible.
Exactly. It's mission in action.
So, okay. Rapid growth, global reach, digital innovation, even preventative healthcare. Impressive stuff. But what about their wider impact? Sustainability, that's huge now. How are they tackling that, especially using this new ESRS framework?
Yeah, adopting ESRS, the European Sustainability Reporting Standards, that's a big deal. For listeners, this is a much tougher, more detailed EU framework. It demands real transparency, measurable impact, not just vague statements.
Right, it raises the bar.
Definitely. And the fact that their CFO, Stefan Beecher, is directly responsible for sustainability. That signals it's integrated right into the financial core of the company.
Serious commitment then.
Seems so. They've set that long-term target, climate neutral by 2050. Aligning with the EU climate law Paris Agreement, and a concrete step is switching to green electricity wherever they can get it. Their 2024 footprint was calculated at 117,315 tons of CO2 equivalent. That gives them a baseline to work from.
Okay, a clear target and baseline. But what about the products themselves? Eyewear, lenses. What does circular economy mean there? It sounds tricky.
It is tricky, and their report is quite honest about it, which is good. They are working on using recycled materials in frame. They have a certified collection using over 20% recycled stuff.
Okay, for frames. But lenses.
Lenses are the real challenge. The technical demands, the need for perfect clarity. Current recycled materials just don't cut it. You can't compromise vision.
Right, makes sense.
And even though the materials, plastics, metals, are theoretically recyclable, there isn't really a standard widespread system to collect and recycle glasses effectively once they're, combined frame and lens.
So they often end up in general waste.
Often, yeah. It's an industry-wide problem, they acknowledge. But they are managing waste during production, like capturing microplastics from lens grinding in closed systems so it doesn't escape.
So progress where possible, but acknowledging the big hurdles. It's a nuanced picture.
Exactly. Reflects the reality of trying to be sustainable in that specific industry.
Okay, let's shift to the people side. Over 24,000 employees. That's a lot of people. How are they looking after them? Fostering good workplace? What about diversity?
Yeah, human capital is critical, especially in a service business like theirs. Interestingly, their workforce is 70% female. That's a strong starting point.
70%. Wow.
Then they clearly invest in training. The Fielmann Academy. It's one of the biggest combined training centers for optometry, optics, and acoustics globally. That's a major commitment.
Shows they value developing their people.
Right, and they're looking at well-being, too. They did their first mental health hazard and stress assessment in Germany late last year covered over 15,000 employees.
That's proactive, not just waiting for problems.
Seems like it. It's about identifying stressors, figuring out support, and on diversity and leadership, they have a target. Get women to 30% of the top 2 management levels by mid-2027. They were at about 27% in 2024.
So, a stated goal to improve representation at the top.
A clear, measurable target. Yeah.
Okay, employees covered.
Yeah.
What about their other key group customers? How do they protect customer data, which must be pretty sensitive, and keep satisfaction so high?
Well, their whole philosophy boils down to, you are the customer. It sounds simple, but they seem to live it. You see it in their retention rates over 90%. People stick with them.
That's very high.
They use surveys after every purchase, constantly seeking feedback, and data protection. Absolutely crucial with health info involved. They have robust policies underpinned by an information security system based on ISO 27001.
ISO 27001, that's the International Standard for Information Security Management, right?
Exactly. It's a rigorous framework.
Yeah.
Shows they're serious about safeguarding that personal and sensitive data against breaches or misuse. Vital today.
Absolutely. Okay, so connecting all these pieces, the growth, the strategy, the people, the sustainability, it all needs strong governance, right?
Yes.
Especially with that rapid expansion and the risks involved.
Definitely. And their structure reflects that.
And
They have an engaged supervisory board overseeing the management board, checks and balances, plus external audits by a major firm, PwC.
PricewaterhouseCoopers.
Right. And those audits aren't just box ticking. They specifically looked at key areas in 2024, like potential impairment of that big goodwill figure from the acquisitions, especially Shopko, and the complex accounting for the Shopko deal itself.
So they're scrutinizing the big strategic moves.
Seems so. Demonstrates accountability. And while they do acknowledge risks market changes, potential U.S. tariffs hitting their supply chain, they have a formal risk management system in place to try and navigate those challenges. It's about building resilience for that ambitious growth.
What an incredible deep dive we've had. I mean, a German family business, now a major European leader, pushing aggressively into the U.S., using digital tech, providing actual healthcare services,
Right.
all while juggling sustainability goals and complex governance.
It really is a compelling story, isn't it? Strategic ambition, impressive growth, but also that evolving sense of responsibility, social and environmental. Fielmann really shows that even in a sector some might see as traditional, you can achieve remarkable success through constant innovation, staying customer-focused, and, well, making some bold bets.
So as we wrap up, here's something to think about, something for you to mull over. How does a company like Fielmann Group really hold on to its core personal mission, that helping everyone hear and see the beauty in the world idea, while it's scaling globally so fast, integrating these huge acquisitions like Shopko, moving into new health areas, and facing tough environmental realities, plus delivering bigger dividends? What does that balance truly look like long-term for a company expanding at this pace? What trade-offs might lie ahead?